Hello and welcome to another episode of the Investor Financing Podcast. And on today's show, we have Tim Diesel, and Tim Diesel is going to talk to us about commercial real estate. He's a real estate broker, consultant, amongst other things. Tim is a commercial real estate executive, entrepreneur, and best-selling author with nearly 20 years of industry experience. He is a frequent speaker at business seminars, sales conferences, corporate trainings, and various investment events, working with companies like Wells Fargo, Sprint, and ADT. He has spoken to thousands of people across the country, inspiring and educating those who want to build and grow their businesses. He is a consultant to investors and brokers, as well as providing the marketplace an overwhelming amount of information. His most recent book is The Apartment Profit Guide, Buying and Selling Multifamily Property. Well, welcome to the show, Tim. Thanks for joining us. How are you doing today?
Excellent. Thank you.
All right. So you're in sunny Florida?
Yes, that's
correct. Nice. Opposite side of the country here in Las Vegas. So Florida is definitely a place I would enjoy spending time. If I lived on the East Coast, I would live in Florida for sure. Other than the humidity, it seems like my kind of place to be. So Tim, prior to us going live, I told you I was going to ask you a lot of good questions to kind of spark some deal structuring. Our listeners and viewers who are going to watch us in the future, they're real estate investors mostly. They could be, small multifamily investors. We even get some larger investors that watch the show, and we're always looking for like creative deal structures on closing on deals. And I heard one of your videos and it kind of sparked this, like, how to limit your out-of-pocket costs, how to get really creative on structuring these deals with credits, lease transfers, all that good stuff. Well, first, welcome to the show. And if I missed anything on your background, please let us know. But give us some tips on acquiring multifamily, where we could have some ninja skills from your previous deals.
Wow. Thank you. Ninja skills. I don't know. Depends on how large the deal is, first off. And it's the biggest thing I've found, and I've helped a lot of people, is they don't ask for owner financing. And I tell everybody on your every offer, every single one you make, owner financing. And some people get scared to ask for owner financing and leave a lot of money on the table. So that's the first thing I would say. Every single offer, every single deal, you might not get it, but just ask for it, and ask for start off at 20%, ask for 15. Really push owner financing. That's number one. I know you had said there's other thing. Obviously, there's repair credits, right? Credit at closing. And then if you I have the fortune of being a licensed salesperson, so you can get a commission on that. So you start putting all those together, and then on a apartment, if you close in the beginning of the month, you got all the rents, all the deposits. That's a lot of money. You can start using. Your down payment is not as bad as people think it is.
A lot of people right now are having trouble finding deals, right? They're looking on places where they probably shouldn't be looking for deals, like LoopNet and stuff. And so really, people that are watching this or listening to this in the future, you really want to try to go off-market deals. What are some of your strategies to find off-market deals?
Oh man. Okay. So this is kind of a loaded one. So anything listed is a waste of your time. Don't look at anything listed. If you see it listed, especially by the big brokerages, and I'm going to put it on blast now. This sucks, right? We all know that Marcus Millichap, CBRE, you're wasting your time. They've already shopped that to their pool of investors. So by the time you've seen it, don't even bother. So these are some of the things I use. Now this works pretty good. So whoever's listening to this, they might come up with some really good stuff. So let's say if there's a property in your neighborhood, and I don't know what county you're in or city or whatever, and you're driving by and you see maybe a 20-unit building or something. Write the address down, look it up. Everywhere in the US, there's a way to look up, I don't know what your county site is, wherever you are. Look up the address. And if you know it's about, 20 units, let's say it's whatever square footage is, and you can kind of make the assumption it's about 1 or 2 bedrooms, write an LOI and send it to that person. Don't send them a letter telling them, hey, we're interested buyer and all that. They're going to throw that away like nothing. Put an LOI together, because an LOI is non-binding. It doesn't really matter. And then what's going to happen is I get a lot of reactions. I got people get back to me and they'll say, well, we want this much or we want this. They're not going to accept your offer. They usually don't. I haven't had one accepted. Send an LOI out, shows that you're serious. That's where I would start. And don't send it in a plain white envelope. Nobody ever opens that. Send it in like yellow or red or something. Make it look like a Christmas card, and make sure they open your mail. And if you do that, because there's only so many buildings you can take down in your area. If you're looking outside your area, you can't necessarily use that because you don't know what the market is. I'm saying you look in your own market, start off market with that. Another thing that I use is I have a friend that's a tax accountant. And sometimes whenever people have property, they're in tax trouble, especially around this time of year. He kind of gives me the heads up on it, things like that. So you really have to have a few people that are on your side. Insurance is great. Property insurance, I've talked about this before. I tell my insurance person to just ask them, what are their plans with the property? They want to renew it, they want to sell it. Let me know. I mean, let me know anyway, because I'm still going to reach out to them. Was that good? I don't know.
Yeah, no, that's real good. And so what I really heard you say is, listen, if you want to find deals, you have to make offers, right? A lot of people think that magically by them talking to a couple brokers that these deals are going to fall in their lap, but really, no matter what, you got to put work in, right? You got to put the work in. And if you're really serious about buying properties, you got to put a lot of offers out there, and it's okay to get rejected. It's okay, because that's going to spark a conversation. That's what the nuggets I got from that. Like LOI, it's non-binding. Put it out there if you like the property and you want to see if they're interested in selling, and most likely they're not probably going to take your LOI off the bat, but they could be interested in selling. That could spark the conversation to lead to a deal. So I like that. So yeah, this one really successful investor told me before, he said, Beau, if you want to do more deals, you have to look at more deals, right? Like you have to look at a deal and you have to write offers, and that's the bottom line. And you have to talk to people. And so that's like the key takeaways that most people aren't doing.
Yeah, there's an average, and I did a study on it. Well, not an actual study, but on average, it takes more than like 30 or 35 offers to get one. And most people that I talk to, they're not making anywhere near 30. They're making 2 maybe, and they're again, you got to make a lot of offers, man, a lot. So after, if you know it's going to take you that many, you might as well get to it. So, because if it was that easy, everybody would be picking these things up. So, you really got to make those offers, and then follow up with them. Just really get out there and make a lot of them. So put in your mind that, because if you're going to make 30 offers, that's an offer a day, and it sounds like a lot, but it really isn't, because you're not going to get them all. The point is to get someone's attention, right?
Yeah, that's a good point. So like when you're looking at these deals, well, first off, if let's say we're talking to people out there that might own a couple rental properties right now, maybe they own some duplexes and fourplexes, and they're a little bit, now they want to step up and look for actual multifamily, 5 units or greater. Where do you find like the sweet spot, a unit count, that you're not going to have as much competition versus like the big boys, and they're kind of mom and pop run? Where do you like to stay in the acquisition unit count?
So I used to say anything over 100, but now I've noticed a lot of the big boys are getting a little smaller. They're even getting up to the 80 unit. I found anywhere from, let's say, 16 to 18 units, all the way up to sometimes it's 26. It's got to be the answer is they can't afford property management, because if they can't get property management, they're managing it themselves. And I've managed a lot of property, and I know if you're managing it yourself, if it's a B or C asset, that is, it's there's a lot of work there. You'll probably have a couple of months with no issues, but most tenants, they're not going to stay in a property for like 10 or 15 years. They're just not. And then when they move out, you got to clean it up. You got to go through all that. So some people are tired because, the average person that owns this stuff, they're not in their 20s. These guys are like in their 50s. So after a while, if they're in their 60s and 70s, they're done, man. And so it's just, so you want to find the ones that require more work. If you're looking at units over 100 units or something, they've got professional management. The bigger guys are going to be able to take you out. You know, you're not going to be able to compete. So if you're a small timer, even if it's 8 units, even if it's 12, because once you get a few under your belt, it just makes things easier.
Yeah, that's very true. And less competition. But most people see, I don't want to manage anything myself.
Exactly.
I even if I'm looking at a 6 to 15 unit building, it's like it's got to make sense. First of all, I got to identify the right manager, or try to, which is sometimes a challenge. But then it's also, you know, are the numbers still going to work, right? If the numbers work, I mean, the idea for me of owning real estate is to eventually become as passive as possible and not have another job. I don't really want another job. And I think a lot of the investors out there, like I know investment groups that their idea is to become vertically integrated. They have their own property management company. That's not my idea, because I'm on the West Coast, and I'm buying right now in the Midwest, and obviously I can't manage there unless I actually built a management company in the Midwest, which I don't want to do. So you really got to find good property management, and that's always seems to be the challenge. What's your experience like identifying good property management companies? I mean, it sounded like you used to manage 4 people, but if you were to look for a manager today for projects you're acquiring.
Yeah, so I've done both. I've managed for people and I've managed myself. And getting property management companies, I'm not very crazy about. And it, I like the people and everything, but they're just the way they run their businesses and how they do it is kind of annoying. I would suggest start your own management company and start with hiring someone that lives on the property and work out a deal with them. This works great for me. So I don't know, let's say you're charging $1,000 for rent. It just depends on where you are. If you're in New York, this isn't going to make sense. But if you're charging $1,000 for rent, figure out a way that's part of his compensation and what he's going to have to do. And he's got an interest in helping you because he lives there, right? So if you were to hire some other company that's only making 10% or 8% or whatever, unless you get to the bigger units, then you can start getting 5 or 6%. But if you're in the 20s, you're not gonna get a deal at 4% management fee. So that's better, because not because of the money that you're saving, you have control of your property. You know who your tenants are, you know what's going on. You know this person that you have in there, they have an interest in taking care of this property and letting you know what's going on because they live there too. That's kind of what I've found. Started off that way.
That's good advice. Our market's like nuts. We're pretty much all over the nation. It's just there's been so much appreciation. At this point, at this point in the market cycle, though, what's kind of are you kind of a little bit more cautious now because obviously, or do you think we're still going for a bull rush here? What was interesting, I just read an article that in Q4 of 2021, these hedge funds, they purchased like 1 out of every 5 houses, which is nuts to me. That now, like these hedge funds, like these Blackstones and these other major buyers are buying that many houses. They bought 1 out of 5 single family homes, and like they're should be pretty smart people, right? And so I was around in 2007. I got my butt handed to me, and granted, I was young and dumb, but I also think that we've had a run for so long, and how do I insulate myself from a downturn, or are we just so compressed on inventory that we're probably not going to see a significant drop in rents or price? I don't know. What are your thoughts?
So you have a couple questions in there, and I'm going to try to get them. So am I cautious? Yes. Are we going to go on a crazy bull run like we did? I mean, I've got my argument. Obviously, everybody else has their own thought. I don't think so. I mean, I would say if you're scared to invest, don't do anything because you're not going to make good decisions. As far as depending on where you are, and you got to use your weaknesses kind of as strengths. So whenever I approach someone that, let's say, I don't know, we'll make something up. Let's say their property is worth $1 million to you, and they want 1.5. And you're just like, there's no way this is going to work. The bank's not going to like it. So I say, listen, I'll pay you the entire 1.5, but I need you to finance the entire thing. And you'd be surprised how many times that works, because they just made money out of thin air, just like that. And they're getting paid for doing nothing. And they really helped me. And a lot of times, whenever I do owner financing deals, I stagger the payments. So I'll pay them 1 month, I'll take 2 months off, pay them another month, and then end of the year, I'll do something creative where I'll pay them maybe 50 grand or 100 grand. And they'll do that all day long because they're saving on taxes big time. There's no like appraisal or any time waiting or anything crazy like that. They have an interest in the deal too, right? Now, this has to make sense. You got to be able to cash flow. So you got to be able to look at the numbers and everything like that. But use that to your advantage. Don't look at it like, oh, this is not going to make sense. Any deal can make sense if you put some time into it and you figure out how to do it. If you look at it through your typical, I don't know, cap rate model or whatever people are using, yeah, it's not going to work. But there's a lot of times where nobody else wants to pay that. So if everybody else is saying no, you get in there and you say, okay, how can we make this work? You'd be surprised how many times people do that.
Yeah, I like that. And it really doesn't matter the price you're paying if you're locking in great terms, right? And
Yes.
so even if you're overpaying per se, you're really not, because maybe they're financing almost 100% of the deal, or maybe you're putting 5% down or something. And from day one, you're cash flowing. And so even you're paying a little bit more, you got them to finance it for 20 years or whatever that is. And it really doesn't matter, because today you're cash flowing this property $30,000 a year day one with very little money out of pocket. And we know in 30 years that asset's going to be worth more then than it is today. So you're basically, it's a win-win. So I'll pay your price, you take my terms.
So if you see, a lot of people are doing syndication deals on their first property and they're trying to raise, I don't know, $5 million or something. You've never done a deal before. You've got no track record. It's kind of risky, obviously, unless you have a mentor, you have someone who can help you. But if you were to go to somebody and you know their property, and I don't know what the numbers are, let's just say it's not worth more than 800 and he really wants $1 million or something like that. Figure those numbers out. And you say, listen, I can do this, but I only have like 50 grand or whatever the numbers are. If you know it'll still cash flow, who really cares? Number one, you're going to have to work a little bit, and rents are going to go up. Your credit doesn't matter. You're not doing anything. I mean, your fees are going to be limited. There's a way to make those deals work. The problem is people are getting so hung up on the price, and the bottom line is cash flow, right? If you're making money, I'd buy your house for $1 million if my payments are $100 a month. So what? So look at those deals. Try to make those deals work. And there's a way to do that. Did that help? I don't know.
That does help. I agree. Like I'm obviously in lending, so I'm good at leveraging properties, but listen, everything is about having tool belts and having tools in your tool belt, right? Like, okay, this is a better seller finance deal, and just get creative. You can be as creative. I was listening to a guy on a mastermind call, and he took down like $100 million of property in a year or 2 years. It was like something absurd. And he was telling me what he was doing. And he was getting like huge credits. He was also a licensed broker. And he would do these deals with no money out of pocket, like $5 million deal with no money out of pocket. And I was like, how did you do this? And he's like, I called like 30 banks. I told them how it was structured. If they said no, I moved on. And this guy was able to grow his business that quickly by being creative. And so that's like one thing I would really want to work on this year for myself personally, is like, let's be freaking creative. Like you want a certain amount of cash flow in your life. You need to be creative to get that cash flow, because you're going to run out of money in your bank, right? Like you only have limited money, and you can raise money, but if you can do it with the seller's financing, I think it's just a better way to look at all these deals. And I do see a big opportunity, like these mom and pop landlords that are 60, 70, and they own like a portfolio of, like, for me, I've been buying duplexes and fourplexes. So I'll just talk about that. They own like 10 of these properties, and like if you can find them and you perform on the first deal, and they have 10 more to sell and they're retiring, you build a relationship with them, and it's like, they're going to give you all their deals because you made it easy on them. So that's kind of my goal this year, is to find those owners. And you can use like Property Radar, PropStream, or any of these data providers, and you can just get their information and knock on their door, call them, text them, send a letter in a red envelope. So I'm excited to really pursue that, because I think that's like the missing link in my investing game. I think it's a missing link in most people's investing game. Most people are just looking for the brokers to bring them these deals. And if it's a big shop, they're shopping it to their list that they're going to give first choice to the people that bought from them already. And the time it comes to you, it's going to be looked over. So I agree with you 100% on that. That's very true.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again.
When you're working with an investor, you provide mentoring for them as well as other real estate brokers, from my understanding. What's kind of your framework to kind of lay the land for the investor that might own a few small rental properties, is now trying to get into the big boy world?
So the first thing I always talk about is management. Who's managing the property? And if you're really supposed to look at this like a business. So if you're going to buy a restaurant, who's going to manage the restaurant? You. So who's managing the property? So if the guy's been doing this for 20 years and he's a pro at fixing everything and he wants hands-on, that's a different type of property we're looking for, right? Guy has just got a whole lot of cash and he doesn't have time for any of this. That's a different investor entirely. So the first thing is you want to kind of get the lay of the land and you want to figure out, okay, what is your goal? What are you trying to do? So really, you want to find out why are people buying this stuff? Are you trying to build your portfolio? I mean, some people have a big portfolio. They just want to pick up something else because they see a good deal. Some people are just starting out. So it's kind of it's a different conversation entirely. And it's also dependent on where they're going to look. So some people they only want to look in their backyard. They don't want to go too far out. Some will look everywhere across the state. So, or wherever you are. And it's got to be, it boils down to who's got the time to evaluate these deals, go through this stuff, who's going to manage this property, who's got the money, who's bringing the money to the table. So after you look at all that and you analyze all that, I mean, another thing I see a lot of times is people overanalyze this stuff and they're just days on, you don't need that much time, man. I actually have a video up where you can analyze property in 5 minutes. You don't need that much time. Stop it. You know what I mean? Get out there and do something. And if you're not going to be the one managing it, or you're not going to be the one, finding renters and all that fun stuff, make sure you've got a team, or not even a team, just another person, someone to help you. Don't try to take this all on yourself. You know what you're doing. So the cool idea that I gave you about owner financing and doing a big deal, that works all day long. But if you don't know how to do that, that could be real bad news for you, right? You could get wiped out on your first deal. You don't want to do that. So I would say educate yourself or surround yourself with people that, if somebody else is doing it, get on their deal somehow. I've done this a couple of times early in my career where I didn't even get paid. Like, I just wanted to get paid in knowledge. And I worked, I screened tenants. I did all this. It was just, the boring stuff, but I screened all the tenants. I had to call them and evict them. I had to do all the BS job. But I learned a lot, right? Because they were already doing the deal. What's an extra pair of hands? I mean, just get involved. Like, you really got to get involved. There's no way you're going to pick this stuff up if you're looking at a deal every once in a while and you're going to your job and you're spending time, with your friends and family and you're going out. You got to dedicate some time to this. Because if you're making 30 offers, you're going to get one. You just are. I mean, there's no way you're not. So people that aren't finding anything, they're just not looking.
Yeah, that's good advice. So anybody that wants a deal in the next 30 days, write 30 LOIs. It's that simple, guys. But the problem is that 99% of the people won't do that. And that's the reality of it, of this, the world, that you have to make these offers to open up doors to get these opportunities. And especially in a tight real estate market, I mean, it's different in like 2008, 9, and 10. Everybody was so worried about the economy failing that you could just go on the MLS and pick up deals left and right. But it's changed completely now. And so to find deals, you have to be creative. You have to look where other people aren't looking. And that's kind of the moral of this show today, is that there's deals to be had. Think about creative financing. Don't overanalyze the deal. I did watch that YouTube video of yours, Tim, and I like what you said. You said get your mortgage bank, or get your banker sizing up to see what the max loan proceeds they'll do on the property. That's a simple way of like, hey, what's the max loan proceeds we can get on this? Because they're going to underwrite based on their underwriting guidelines, and it's either going to size up or it's not going to size up from that standpoint. Look at the expense ratios. I heard you say that, right? Like BC properties, expense ratio should be around 50% is kind of a rule of thumb. So these kind of quick snapshots are what all you need to do, because in 5 minutes you should be able to say, no, this is not going to work. And if it kind of meets these little quick analysis, that's when you can spend more time on it. But you don't want to like analyze a deal where you're way off in price, right? Like, it's just like, unless it's an off-market deal and you're offering terms to the seller, you're wasting your time. So I like that video that you did too. So
thank you. Thank you.
Yeah. So kind of wrapping up our conversation today, I'm just going to end this with a couple nuggets for people to take away from this conversation, where we kind of took this conversation, and then also where people could maybe find out more about yourself if they're looking to invest and buy some properties, and anything else that might be interested in people following you for.
Okay. So, well, you can find, just YouTube channels, Tim Diesel. You can Google Tim Diesel. I'm probably the only guy out there. And you can get all kinds of information about me, and glad to help out whoever has questions or anything like that. And if you're really smart, you can just Google me and you can find like my cell phone number and stuff. I get text messages and weird questions and snapshots of pictures and what do you think of this, all kinds of, so yeah, totally cool with that.
Very good. Very good. All right. Well, what's your departing message to our audience here in real estate, in life, and personal development? Anything you want to add?
It's out there if you want it. Everything's out there if you want it. And if you're not getting it, you really don't want it bad enough.
I agree 100%. Everybody, I hope you enjoyed this episode. I think I asked pretty good questions. I like the conversation. I hope everybody that's watching and listening to this in the future enjoy this episode. And Tim, appreciate your time, and thanks for being on the show.
Thank you so much.